Welcome to Yelland Consulting. In this video, I want to take you through some of the yield and income producing investment options to the average punter out there. When we talk about yield, we are specifically talking about an income providing asset class. And why may this be important? Well, specifically when we get to the retirement ages, we need to have an income for us to therefore be able to retire comfortably. One of the major things for Australians in this modern day and age, and for the future even more so, is that the pension is becoming less and less and less. What this has created is a little bit of a squeeze on people. For example, most people are paying their super. Okay, most people's employees pay 9.5% at a minimum, because that's the legal amount, into a superannuation account year in, year out. That is designed so that the government doesn't need to give you a pension. That's what they hope for anyway. Now, in many cases, they still do need to give some sort of a pension. The issue that most people have is that they blindly put their money into their super account without actually knowing why or what it's actually going to equate to when they retire. This is obviously problematic because if you are on a journey where you don't know the end destination, it's very hard to chart your own course and achieve the outcome that you desire. For example, if we're looking at having a portfolio in super of around about $500,000 and we're looking at shares having a yield of 7 to 8%. Now keep in mind that is on the rather high side. I'd rather err to the higher side in shares and to the lower side in property to make my point even more valid. So if you've got, say, $500,000 in your superannuation account, most people would think that's quite a lot of money. And you know what? It would be if you were to get that every single year. But if we look at a yield of 8% on that $500,000, that means an income of only $40,000. Now keep in mind, most people will get between $400,000 to $800,000 in super, obviously depending on their income and their salary sacrifice and circumstances. Either way, even at 8%, which I might add again is rather high, it's still not going to be replacing your current source of income. So what options have we got? Well, with shares, we have about 7 to 8% growth and about the same when we talk about the yield or the income, which is in the form of dividends. That's again on the high side. Keep in mind, shares move up and down rather erratically. So if your 500,000 and 40,000 income was to say dip when we're going through a downturn to, I don't know, let's just halve it, say a 50% pullback to 250,000. That means your income has 1 year gone from $40,000. The next year it is $20,000. And guess what? Here's an added bonus for you that like to have shares as a yield producing income providing asset. I'll give you an example. BHP, around about 18 to 24 months ago, decided when the iron ore price had dipped and they were struggling, that they were going to cut their dividend yield by a whopping 75%. This equates to exactly the same as you renting an investment property out for $1,000 per week. Your tenant knocks on your door one day and says, listen, I'm only going to pay you $250 a week now. And guess what? You have no control. You can do nothing. You need to wear that on the chin. A 75% reduction in income, you can't afford to have that. Most people don't understand this. Most people are not aware how poorly their super funds are performing, and most people are unaware that property, the income produced from property in the form of rent, it's very easy to maintain. It's not exclusively related to the stock markets, meaning if you're getting, say, $2,000 per month from this property this month, if the stock market falls, it doesn't matter. You'll still get $2,000 income. Of course, there are still risks. What are those risks? Well, if we don't have an income, if we don't have a tenant, we don't have an income. And that seems pretty obvious. So how do we get around that? We make sure we buy in an area that has strong, solid rental returns, good tenants, and we make sure we have an area that is very high in demand for rental properties. How do you do that? Well, you would engage with a company such as Yelland Consulting. Keep in mind, we live and breathe in this space every single day. It is our job as a company to research different parts of the country, to find good growth pockets, to find good high rental yields, and to find areas where there are good tenants. This is not an easy thing to do, but when we do it day in and day out, this is our specialty. Yelland Consulting, let us help you to help the strategy-wise, to help understand the risk you're carrying right now in your super and other investments, and how to maximize exactly what you can do with what you have in this current day for your short, medium, and long-term game. Please book a 1-hour consultation for a senior consultant to come out and sit down with you right away.